Analysts at Meristem Securities believe third quarter results and sector-specific reforms by the Nigerian government are likely to bring investors' interest back in the Nigerian stock market. Matilda Adefalujo, Investment Research Analyst at Meristem, joins me for market discussion. Matilda, thank you for joining us today.
Thank you for having me.
It was the last trading day for the month of September and also for the third quarter. I believe the market quarter to date has lost over 1%. But just briefly, let's take stock. Walk us through very briefly now market highlights in Q3 and what investors are primarily focused on.
Yes, I mean, just like you said, thank you for having me. Just like you said, the markets shared 1.6% of its value in Q3, and different factors actually contributed to this. On the negative side, we saw the windfall tax. We saw the effect of the windfall tax. We also saw some sell-offs on large cap tickers like Danksem. We saw on Seplat. We saw on MTN. That's at the beginning of Q3, and we also saw the impact of not so good results for some manufacturing companies during the period. Some companies recorded some losses, some declines in bottom line. On the positive side, however, we saw Wando's acquisition of Ajib. We saw different banking recapitalization exercises. Then there was also MTN's announcement of its arrangement with IHS. Then there was also Fitzin's partnership with some Chinese firms. There was also the Nigerian breweries rights issue, and also I think more importantly was the the falling yields in the fixed income space. There is generally a negative, a negative or opposite reaction of yields with the equities market. So now that we are seeing yields, start to moderate, the equities market is now starting to rebound. So most of the gains that, if we can say there were gains in Q3, most of them started in September, when we saw yields start to moderate in the fixed income space.
Right. Let's look ahead now, going forward in the coming month and of course quarter, with the MPC tightening further, of course, still fighting high inflation. Talk to us about, you did mention in your note that you're expecting to see more investors come back to the equities markets. Tell us more about that.
Okay, so for the rest of, for Q4 and the rest of the year, it's expected that, first, like I mentioned before, there is falling yields in the fixed income space. So I believe that there would now start to be an outflow of funds from the fixed income space into the equities markets. Yes, I'm not going to discount the fact that the MPC, hiked rates at the last MPC meeting, but then you'll notice that the CBN governor was mostly tilted towards, curbing of liquidity management. There are some targeted funds that, came in during the period. And also, I believe that, or we believe that, as portfolio managers, start to rebalance for the end of the year, there would likely also be some foreign inflows, just as I talked about, movement of funds from the fixed income yields to equities. So there might also be some foreign inflows that would drive that. Then there's expected to also be, some sector-specific pronouncements from the federal government. We are looking out for, reforms in the oil and gas sector, and the expectations that there could be some acquisition of foreign IOCs. So when we see that start to, pan out, happen, or, yield some fruits, we'll see some positives in the equities space.
And outside of the banking sector, also going forward, outside of the banking sector and the oil and gas sector, which we've seen do quite well. We still have the cement makers, the industrials, we still have the consumer goods, the fast-moving consumer goods names. What is your outlook for these names, those, especially those of them still struggling with FX issues, still struggling with a shrinking consumer wallet?
So, well, in the manufacturing sector, there have been different things, happening. Some, companies are trying to consolidate their expenses. And you would also notice that when in terms of, the depreciation of the Naira year on year, or even when you look at this quarter, we do not expect that there would be as much foreign exchange losses, just like as we've seen in other quarters. So would see moderated FX losses in the next quarter, or at least in the quarter to come. And also there have been other companies that are making calculated moves to ensure that they are trying to moderate their losses. Look at Nigerian breweries with their rights issue offer. So we expect that as more companies try to one, up their earnings, and also try to moderate their losses, we'll see investors also first react to that based on better numbers and better earnings from those companies, those manufacturing companies.
All right, and finally, with the market returning just over 30% year to date so far, what is your forecast for return for October and even for the rest of the year? If we're seeing more investors coming into the market, obviously that would drive gains. So where do you see, are you reviewing your year end for where the index will end?
Well, I mean, I think everything is majorly going according to plan. Look at UBA. Their earnings, their bottom line came in lower. So I do not think that there is any surprise majorly right now. So our forecast for the rest of the year still remains, what we had said that it would be from the beginning of the year. So except any, major shock or surprise, stems up and tries to turn things around, I think that we're still fine.
All right, Matilda, thank you so much for talking to us today. We appreciate your time on the show. Matilda Adefalujo, Investment Research Analyst at Meristem, taking us through trading at Nigeria's stock market.